Speaking of China, in a note this morning, you point out that the People's Bank of China slashing its reserve requirements overnight before Friday is really what sparked that rally. So how much of what we're continuing to see in the markets beyond Friday is China related and reacting to what they're doing over there?
Well, I think almost half of the move on Friday, because if you looked at the overnight futures, they rallied nearly 350 points in the Dow. And then you got the much better than expected payroll data, but you didn't get much of a market move out of that. And then after 10 o'clock, when Powell said he would be patient and flexible, that's when we got the rest of the rally. And I think what happened was, if you go back and look at the rally, they were upward thrusts and then a pause to see if prices would come back down. When they failed to come back down, people said, I guess I have to pay up, and there would be another upward thrust. So, and that kept us rallying till shortly after 1 o'clock.
Got a big move in oil this morning, and also about an hour ago, all the major indices started heading kind of decisively higher. They're not that high, but decisively higher after kind of a middling morning. What's that about?
The Saudis came out and said that they were going to have a pretty big cutback in production and sales, and that put an extra bid under oil. Oil's had a pretty good run for a couple of days here. It is a key factor. When oil looked like it was going to break below 44 and maybe head to 40, people began to get worried about the amount of debt service they have there. So that's one less worry as long as oil is rallying.
You write that the rather bland reaction in China to Friday's rally makes some wonder if there was a suspect?
Yeah, that in China itself, Shanghai and Hong Kong really didn't take off. You had a very nice move in Japan. That was up the equivalent of about 500 points in the Dow. So they were close behind us, but they're much more modest. And you can see in Europe, there were kind of a mixed bag there. So people aren't buying as much into the China thing as we seemed to when it first came out.
That said, it's poised to be another really busy week in terms of market-moving headlines. Obviously, you have the U.S.-China trade talks through tomorrow. You've got the beginnings of some earnings, Lennar, KB Home, Constellation. But then you've also got the Fed meetings and what seems to be a lot of Fed speak on the calendar, including Fed chairman and vice chair, both on Thursday. What do you think the biggest thing investors are focused on or should be focused on this week?
Well, I think one aspect you didn't mention, later in the week, we're going to begin earnest debate on Brexit in the British Parliament. And I think if we start to get some details there as to what the impact can be, that could hurt the market. The Fed speak, I think they will be extraordinarily circumspect about what they say. I think they've learned their lesson. We went from a couple of moves away from neutrality to flexible and patient. So we're really back to data dependent again. They just wanted to get a new phrase for it.
Art, we've still got a government shutdown happening, and it's a pretty long one at this point. To what degree should investors pay attention to that? Is the market reacting to it at all? And do you see any point at which investors will react, especially given that there's no end in sight?
If it remained this way, then I think it would begin to kick in later in the week. But what I think the market believes is that the Democrats are probably going to lead in the House by basically taking the government apart and taking one aspect at a time, passing a funding bill for that. Obviously, they'll go right toward the idea of tax refunds, because that will be critical. That will hurt anybody's popularity if people don't get the refund they're expecting, and it will hurt the economy. So we'll see if that process goes well. Then this kind of benign attitude is justified. If they are unable to work out something like that and they just stay where they are today, then I think it will negatively begin to impact the market.